Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market rundown. I'll get my lighting set up sometime in the next week or two. So looking at the market, we've got the S&P 500, pretty much a daily inside bar, very boring day. I wasn't watching the market at all today, and it certainly looks like I took a good day off. Nothing going on and an extremely tight range. So essentially, if this inside bar breaks bullish tomorrow, then our daily high or low is established at 29.13. And if our daily inside bar breaks bearish, then it's still the same period of consolidation. We have not found a daily high or low yet, and we're still looking down at 28.74.70. So very simple. That's pretty much what dictates what we're going to be looking at, is which direction the inside bar breaks tomorrow. And it's going to give us a good setup as we head into next week as far as short-term direction. We're either going to be looking to head back up to our recent high or looking down at this support level. So we got the G20 meeting upcoming, and the market, in my opinion, has been slowly pricing in the potential of Trump and China working on a deal. So I think we would have a negative reaction if nothing came of it, but I don't think it would be significant. I don't think the market has priced it in too significantly leading up to that point. So someone asked me, what would I be doing with the G20? As a day trader, I would not be holding anything overnight. I want the odds in my favor. That's how I can consistently, over decades, make this game work for me. And I do that by looking at familiar setups. Patterns happen over and over and over again. So I look at a setup and say, okay, an equilibrium. I've seen it break bullish this many times in the past, and we get the follow through. So I make that trade, or I make a trade based off of, the hourly RSI being oversold, looking for a daily high or low. Those are high probable scenarios as opposed to gambling on earnings, gambling on inventory reports and commodities, gambling on the outcome of what the G20 summit is going to be. I don't want to gamble. I'm not here to gamble. I'm here to put the odds in my favor when I do place. I'm gambling, but I want the odds in my favor. It's the difference, in my opinion, between counting cards, playing blackjack, or not counting cards. And if you're counting cards and you know what you're doing, you're going to come out ahead way more than someone who's not. IWM on the daily time frame, significant bull day. This, in my opinion, almost looks like the market pricing in, we got the debate coming, and we could get some negative. And then after last night's debate, the IWM and the biotech sector saying, well, that wasn't bad at all. And maybe we priced in negativity prematurely. So we're looking back up at resistance of 156.22, and I am looking for a lower high compared to that level because we did lose the daily high or low uptrend. So that's notable, but that's a significant bounce. Let's see how much follow through the bulls can put together there. QQQ, multiple daily inside bars, just like SPY. Please silence your phones. So looking at the same as SPY, inside bars, except this is even tighter, and how it breaks tomorrow is going to dictate whether our daily high or low has been established at 184.65, or if it breaks bearish, we are still in consolidation, and we're still looking at the last base of support that was established. XLF, good sign for the bulls in the sense that we broke support and got no follow through. So we had our high, low of consolidation, double top, lower low, but at this point we only broke that support level by 4 pennies, and this is the reaction that we see. So in my opinion, I can just consider that a double bottom. So that is our baseline of support. This is our baseline of resistance, and we'll see how long we stay within this channel. And at this point, we have been within this channel for about 16 days, and we could easily stay within it for another 3 or 4 at least. Inside bar for the healthcare sector, break it bullish, and our higher low on the daily is established at 91.50. Break it bearish, and we have not formed our higher low yet, just in line with what everybody else is doing. XBI is a daily higher low. So that's a very clear higher low established. The resistance is up at 88.77. If we top out on Friday, we're going to look at the potential of an equilibrium and tightening range. Reason being, the odds of the bulls seeing straight up continuation move is less likely because of how far we did pull back. So we'll watch for an equilibrium over the next few days. The VIX is trading sideways, inside bars. You guessed it. Everybody's forming inside bars, tightening ranges, looking for these clear breaks tomorrow for short-term momentum into next week. Oil, inside bars, extremely tight, nothing going on. With a bear break, daily consolidation is underway to form a higher low, and with a bull break, we're not ready to consolidate yet. At this point, oil has seen a higher low 8 days in a row, and we'll see how long. And actually, I take that back. Today we broke by 5 pennies, but not very significant of a pullback at all. And I'm going to treat that like an inside bar. So if we break the low of today, then daily consolidation is underway. And if we break resistance, we're looking up at pretty much 61.39 from there. Natural gas finally getting over this daily 12-period exponential resistance. It's still all about 2412 for me. That's the most important resistance level. And we're still watching the potential of the inverse head and shoulders pattern. Even if we reject, we're not going to give up on the bulls. We're going to see if they can form a daily higher low and change that trend for the first time. The last time the daily trend changed was up here, and we saw no follow through. We know a trend change with no follow through means zoom out and look for the potential flag, and it was a bear flag on the weekly. So the bulls would want a nice and convincing trend change if it does take place. Gold is healthy consolidation, and it's a bull flag at this point. And looking at the 4-hour chart, we've got resistance at 14.15 that's approaching. The bulls want to change the 4-hour trend to be confident our daily higher low is established. But if that's as much as we're pulling back, that's a very clear bull flag that is keeping the bulls very much in favor at this point. So breaking the 4-hour lower highs would increase the odds that it's a daily bull flag. Rejecting from the 4-hour lower high of 14.15 would still keep this consolidation alive. And the bull miners, inside bar just like everybody else. And if gold is able to shift the 4-hour, we'll see these inside bars break bullish and head back to the recent high, trying to be a bull flag as well. So pretty much everything's tight, and we're going to see a tight break tomorrow. And ideally, we see volume spikes with those tight breaks, keeping in mind that we got a holiday week next week, which is also important if you are an options trader. Pretty much we're trading with 30% less time next week than compared to this week. So just be aware that option premium is going to be affected by that. So we'll check back in over the weekend, and we'll have an answer as to which our break occurred in which direction and what we're looking for into next week. I appreciate you watching. Hope you have a good rest of your night, and we'll see you soon.